Welcome back, everybody. Our next speaker also talks about bridging ecosystems, which Mr. Rotenhäuser just mentioned twice. It's Philipp Pieper from Swarm Market, and he will be talking about bridging CeFi, centralized finance, and DeFi, decentralized finance. Have fun and enjoy. Philipp, you're still muted.
Yep, all good. Thanks for having me. Today I want to talk about sort of introducing, a new layer that we're introducing to the market called Swarm Markets. But maybe before actually going into that, I'd be happy to sort of give a little bit of background here. So myself, I worked in the past for companies such as Deutsche Bank and Allianz Group. I lived for 10 years in California until very recently. I ventured into crypto in the year of 2015 after selling a company that I previously founded in Palo Alto. And we actually revigorated a project that is known as Swarm, which probably sort of a lot of people had heard of. There was like an early iteration that went into something called crypto equity. We then actually sort of, picked up the pieces in 2017 and then, built it into probably one of the premier, security token focused projects out there. And it was a DAO, and we built it as a DAO. It's now at this point, it's fully community governed. It operates, open source technology to do, things that, facilitate, compliance technology to do token issuances. And so there's the standard called SRC20. There's a fundraising standard called SPF. It's all open source. And very recently, actually, there's been a great community efforts to actually bring a lot more usability to that, which is now at myswarm.app, which is a fully self-serve way to launch your own token without actually having any kind of knowledge of technology. So really, huge step forward in being able to sort of, bring usability to the space by people that, mostly have knowledge in finance and have knowledge in compliance and have knowledge in how to create an offering and tell a story. But in this case, now have the tools to actually enable them to do it without actually have to rely on, technology providers, et cetera. So that said, in end of 2019, my co-founder and I, we then actually started to develop a company on top called Swarm Capital, which, we were seeing all this effort that had gone into tokenization, but there was this missing gap to make it really usable. And not just from a UI perspective, but also from a services perspective. So the issue was that, it's sort of like technology in the early phases where you build Lego pieces and you throw them in front of people and you expect them to build a house, but it's not really coming together if you don't actually have the people that help you create that house. And so this company, we set out as a for-profit entity, and it was focused on issuance services, which means that in this case, we really took clients by the hand, such as Siemens, and we walked them through the door of, appreciating blockchain, but then also some, build usable technologies that would integrate with their environments, would make them comfortable around it, et cetera, et cetera. So that's sort of for the background, but I do want to, resonate some of the comments that Wolfgang and Robertus, which I really appreciated actually the pre-talks, were making before about sort of the DeFi market. And everyone loves to look at graphs. I think, it's fair to say we've been in an incredible run since 12 months, maybe 9 months, maybe 6 months even only. And aside from a bull run, driven by BTC and Bitcoin being sort of in its usual cycle, I think what we can also say that, a lot of this was also happening because there is a growing reliability and also credibility that the blockchain and cryptocurrency infrastructure actually has brought to the market. So, and one flavor of that is this market called DeFi, which is an incredible concept of actually sort of going and building financial services that are blockchain based, that are mostly transparent, that are smart contract based. And most of this happening on the Ethereum blockchain, but now recently actually has been moving to other blockchains as well. And this spans applications from lending to decentralized exchanges to derivatives and payments. Now the volume here is something that a lot of people have started to notice, and it's not just if you actually even deduct the growth that crypto in itself had, because it drives part of this curve. It's still, if you compare it to Bitcoin's growth of per today, I think it's 4.3, and then compare it to what DeFi has gone through, which is easily 64x, and there's some double accounting in it. So let's be fair. But the adoption here is probably the thing that makes it undeniable. And the adoption is that there's a significant amount of elements that I'll return to back later that make it highly attractive to interoperate with this environment, that give the consumers of this environment the confidence that they want to engage in it, and that allows them to execute this, although the experiences had been sort of lacking beforehand. So I want to focus specifically on one aspect of it, and it's a big part of the ecosystem, but not the only one, which we call sort of network liquidity. Also, it's coined as a term, automated market making, but I think it's worthwhile for people to start to understand what that means. And it's been reiterated. So there's several videos out there that you can watch to actually understand this in more deeper fashion. But the concept is quite revolutionary. It's probably been one of the most impactful concepts that the space has seen, that you as an asset holder, so in this case, the bottom part called liquidity providers, but you can call them asset holders. The asset holders get the ability to put their assets into a pool, in this case of two tokens, A and B. And by doing that, it becomes a liquidity pool against which the swap, or the traders trade. And the special thing here is that this is all based on the desire by someone owning an asset to help the market develop the market trading on top of the asset. And it's something where the liquidity provider is in full control over doing that, which means that at any point in time when they think that this is not a feasible exercise, they can reverse that again. They can take it out again. And for the user, it's obviously a very transparent way to know before they go into this, how are they interacting with this? What is the price that they're going to be quoted? What is the effect going to look like? What is the, what are the participants? In this case, it's only a smart contract, so there's no one in the middle that makes them potentially doubt this. So this process of actually sort of as a trader to be able to deposit, withdraw, and the immediacy of this action and the uptime, it collapses a lot of steps that's still in the centralized exchange ecosystem, which has its validity and it will be around for a very long time for very specific reasons. But it has grown on the user that this is something that that is desirable, and the numbers speak for themselves. Where you actually have representatives of this, which were named before by Wolfgang and others. It's Uniswap and Balancer and Curve and SushiSwap. A lot of experimental topics that were until 12 months ago, sort of trialed before by Bancor and others. But it's fair to say that probably the last 12 months were pretty exciting to see how battle-proven that has become. And obviously, there's a lot of pots of gold that people have tried to get a hold of. So the infrastructure has been under current or under constant stress to be able to do something with it. So it's been a very exciting space to watch. And at this point in time, of this roundabout $65 billion total value staked in the market, there's roughly $19 billion that's are staked liquidity of crypto coins that are sort of in these pools. So it's a fairly sizable volume, and we're looking at daily trading volumes of $4.3 billion. That's come close to the order of magnitude of Coinbase. It's come a long way. It's not quite dominant in the space yet, but it's probably very noteworthy that nobody really thought this kind of volume could happen on a DEX until this very recent surge of DeFi growing into this area. What's interesting is that, and we were talking about yields for DeFi, earlier, that the liquidity providers do make their return, and I'm extracting any kind of rewards that happen on top by the tokens that are then on stacked on top of it. But these are purely the returns that happen within the pools, or on average within the pools of tokens being traded. So if you're If you're an asset holder, this becomes a really interesting perspective where by actually putting your capital to work in a liquidity pool, you can actually make a passive income and you can actually put it to work for the good of the asset itself. So that's a quite remarkable concept that probably I would say, and I would score as and underline as one of the most exciting concepts in in a financial markets setup. And the benefits are, go beyond that. So if you really think of, the trading aspect, it is extremely simple to swap. You get very simple interfaces, punch in, two numbers, get a quote, and then basically execute against a smart contract. Very immediate, as I described it. The second piece is that liquidity provision in financial markets has been a very sophisticated exercise. So you have to manage an order book, you have to manage all the different positions, you have to sort of find out actually how the market participants react on an ongoing basis. That is an art and a science at the same time that very large organizations have perfected. But in this case, this exercise becomes dead simple. It's just simply, putting your assets into a smart contract and then, just making economic decisions, whether you want to leave them in there or take them out again, and what the security of the assets are that you're supporting in this case. And there's more complexities that have been introduced recently by subsequent versions of Uniswap and Balancer. So it's becoming more of a sophisticated exercise, but still the baseline concept in comparison to what's happened in the financial markets is incredibly simple. I think the two last aspects are probably the core aspects that I would score highest in terms of what the appeal is. So the complete transparency of the mechanisms. Not everyone reads code. So the people that do read code, that understand these mechanisms, they can completely understand what's happening. They can actually preview what's happening. They can observe what's happening. They understand if something goes wrong, and they can analyze it and then sort of revert back and do it better. But then the second piece is self-custody. You don't have to trust someone else by doing these exchanges. You actually hold your assets in your own private key-driven wallet, and then you execute from there. And by having it self-custody, you can do the same from within. If you're an institutional player, you can do it the same way from your institutional wallet, and have proper procedures around executing those trades. You can build multi-signature executions, etc. So the self-custody piece gives a huge amount of comfort to the market participants to know that they're not being misappropriated, that they don't have to trust another middleman to do it in the right way, and that speaks a huge volume to itself. But there's obviously also issues. And when I say that UX is there and it's been coming a long way, yes, it has, but it's still something that obviously needs to improve. And part of that is also the issue with gas fees, specifically on the Ethereum network, but even beyond that, like I think Rupert was referring to this, that sometimes at certain points in the market, it is still more costly than it is in the traditional markets. But here we are. So, and regulatory aspects are probably the biggest issue, right? So what is it that I'm actually doing in this case? And that's a big question mark. So what we want to introduce today is an incredibly exciting concept of what we call the first licensed DeFi platform in the market. All we're doing in this case is actually the same picture, but with small additions. We actually have the onboarded customers to both sides, and we have analyzed every step on the way to actually make it regulatory compliant. So the result is a platform that we've been working on for quite some time together with BaFin, actually. So at this point in time, we are under provisional license, fully licensed to do trading and liquidity models that we had great interaction with BaFin to have them understand what that means to do it in a decentralized fashion and to do it in a self-custody fashion. But it still preserves the DeFi core principles of self-custody, of transparency. And it introduces this new concept of network liquidity to a market that can be then be operated with very different assets. And this is all extensible. And it's been not easy. Regulatory processes take time. And it's something where you need actually sort of a back office to scan and to make sure that it's actually working according to plan. And I think the other piece that we've been trying to sort of work out very specifically is the scalability, not just of the technology, but also the model and the regulatory processes associated with it. So I'm sure that people understand that the advantages make it worthwhile. So because we are what we are, we can actually create new kind of partnerships with the market. We can actually introduce partnerships that give us, a login that someone can log in with their bank account. We can actually be a counterparty to institutional grade, market makers that now want to venture into this space. And we can obviously, by doing that, increase the trust for both participants, the participants that are partners, but also the participants that are consumers. And the second big piece, I think that is the most that we set out to do, is to introduce new financial models and new financial services on top of this infrastructure that rely on the fact that we have a named counterparty, that we know who the participants are, and that there's this trust of regulatory process that makes it into something viable. So the three things that we think we're adding to this, and this is not replacing anything, it's one option for people to engage in, is that we think that we're adding new DeFi breaks, new things that people can play around with. And I think it's probably obvious from our DNA in the past that we are very focused on bringing outside assets in a very lean and very tradable fashion onto the blockchain. And by doing that, there's new creative models that can with existing projects, but that can rely on the value represent. And by increasing that appeal and making it super simple for existing financial market users to actually onboard, we think also that this has the potential to not just increase the asset base and the numbers, but also the user base. And we think that there's a 10 to 100x that the DeFi ecosystem can help grow with tools like we're introducing and beyond. So if you want to talk to us, reach out. We will shortly release the first version of the platform, starting with the AMM model, but it will shortly after go beyond. And we are incredibly excited to start talking with the ecosystem that is interested and curious to engage and wants to learn or educate us, more importantly. So thank you very much, everyone.
Thank you very much. There is one question, if you still have the time to be with us for a few seconds. Great. I think it might be answered quickly, but take however much time you want. There are, as you probably know, multiple US dollar stable coins. Do you see from an AMM or a pooling perspective, do you see, do you have a preference for any of those? Is it better to use an algorithmic one that is directly backed in this way? Is there one that is optimal to avoid being exposed to, for example, individual protocol failure or anything like that?
So I think it's very important to understand customer demands in this case, right? So you really want to engage with whatever assets the customer base wants to or desires to engage in. So not really be partial to that kind of answer. The second perspective, however, is regulatory. You have to sort of look at it and see, is the fact of this asset maybe sort of, something to look at closer or get even an approval by. And, I think the decentralized assets are, or the decentralized versions are probably something that is wider accepted from that perspective than probably the centralized ones. That said, we are very much in favor and, hope also to contribute to that, to bring euro-based stable coins that are key and essential to creating sort of a Europe-based financial market. Does it help?
I think so, yes. I was only given the question, so I cannot really answer if the question was answered for the person who asked. But I think so. So I think you actually added to that quite well. There is another question which I would like the Regie to repeat. Okay, so basically there's the question if DeFi can be also elegantly implemented to, for example, other blockchain environments like Cardano or there are many, I think, or if there's already a cross-chain solution in place which might help to scale the entire sector a little bit better, in your opinion, or in your knowledge.
So we're looking at every option. So the first installation is going to be on Ethereum. But the concepts and procedures that we've been sort of working through are applicable to whatever chain that we find to be fit for the use case that we would be driving. So since you can't, if you have certain use cases where the value of what you're trading is like $20, you can't have trading fees or transaction fees that are higher than that. But I think there's also something to say about, not just developer ecosystem, but also the acceptance of infrastructure. So the impartial infrastructure. So if you look at Ethereum, it's been highly endorsed by the CFTC in the United States. It's been accepted as an infrastructure that is impartial and accepted that it isn't subject to issues on the consensus side. And I think that the acceptance that has in the institutional space is something that others will still have to work through and gain. And that you can't just give that by having arguments. You actually have to work through it, with the regulators to have them accept that. So I think it will take some time. We're incredibly excited about some projects in that space that are basically sort of perfect environments to have a much more efficient, possibly even sort of a faster execution. And a volume-wise, also being able to cope with the volumes we're speaking about. But I think it will show itself pretty quickly. But it's not BSC at this point in time because it's just too centralized.
Excuse me,